The surprise of the day, at least for me, and I do know some people who weren't so surprised by this, but me and many others, the surprise of the day was the fact that the Federal Reserve decided not to begin tapering its asset purchases. This is something that me and others believe is essential at this point. Interest rates are unreasonably low. It doesn't really make a whole lot of sense to lend anyone money in this environment, particularly with inflation, and one can see and or argue that the interest rate you get right now is below the rate of inflation, which I suppose makes more sense than keeping cash in the bank. But for pretty much all debt except U.S. Treasuries, one has to question whether the risk is worth it. So I think there needs to be a raising of interest rates. And I'm not talking about the Federal Reserve. I'm talking about the artificial demand for loans that the Federal Reserve is creating. It's artificial. There was a point in time when this program was incredibly crucial, and it was implemented under that scenario. And that was, wow, COVID has hit the United States and the market is crashing. There was a period in the March and April time when the credit market froze. This was catastrophic for the United States and the United States economy because companies couldn't raise money, but they saw their sales plummet. Things like airlines, restaurants, large restaurants is more relevant too. Lots of businesses saw this problem occur. Movie theaters, AMC. They had to raise debt in order to stay alive and keep people employed. The unemployment situation would have been a lot worse if the Federal Reserve did not provide these asset purchases and liquidity to the market. However, the market has evolved significantly from that point. There's a lot of people trying to buy bonds just naturally. We don't need the artificial buying anymore. The economy is doing well. However, the program is continuing unhinged despite the strong economic recovery and the strong economy that has been in place for several months now. And it's going to keep going. Today, nothing changed today. Nothing changed. So what does this mean for us? Well, before we get into how it affects the positions we're talking about most on this channel, let's talk about what it can imply for the broader economy. If you have more asset purchases and more monetary stimulus, which is what this is, it goes down very simply. They see a bond for sale on the market. They press a button. That person gets cash. But where'd the cash come from? The Federal Reserve doesn't sell anything. They print it. So, more money supply increases means, in theory, there will be more inflation. And that would be correlated with the inflation we've seen. And we should expect inflation to continue even if these asset purchases were to stop today. Why is that? Inflation is a lagging indicator or lagging effect of a cause. It takes time for that cause to result in, or that effect to result from the cause of printing the money. It's never, instant. So there's a good chance we will see that take effect over time, especially if employment remains low and productivity remains lower than it should be given the increase in the money supply. It's a potent combo that we had seen in the Weimar Republic. And I'm not saying we're going to get to hyperinflation, but I'm saying some inflation is likely. And how does that affect the stocks we have on this channel? Well, we have a lot of energy, and energy is a hard asset that exists regardless of what's occurring in the world. People need to consume energy, and that's not going to change tomorrow. That's just not going to change tomorrow. So if there's more money supply, but energy demand, consumption remains the same or continues to increase as the economy continues to reopen and expand, we should expect the price of energy or oil to increase. There's a lot of dynamics playing that, not just inflation, but inflation makes that happen. Now, let's talk about what else is going on with regards to energy. We've covered inflation is likely to occur. The surprise of the day is the Fed is doing nothing to halt that. At least surprise to me. I know people who believed that this was going to occur, and they're right. That's cool. Anyways, energy. What else is going to make energy go up? The White House has given us all the clues we need. 2 weeks ago, OPEC, pick up your production. That's unprecedented. OPEC is a cartel. They don't like oil. They've had a very bad posture towards oil. The first day Joe Biden was president, executive order, no more drilling on federal lands. That scares U.S. producers. They don't want to produce with that kind of headwind, especially after they just had negative $37 a barrel oil last year. So, lack of U.S. production. OPEC saying, or White House saying to OPEC, we need production. OPEC says no. United States unloads 20 million barrels onto the market this Monday. Price per barrel finishes up 3% or 5% on Monday, 3% on Tuesday, up 10% for the week. That's a big week. All that's happened is the sellers have been washed out. In previous videos, we've talked about the notion of paper traders. They've had their day. Delta is beginning to roll over. They can't be panicking uncontrollably as they had been in the past. And in the past, just few weeks ago, price per barrel was $77 per barrel. Right now it's at $68. The last time energy was at $68 a barrel, 2 last times ago, right around June 4th, we saw OIH, the oil services ETF, be priced at $240 a barrel or per share. Today, we're seeing it at $192. Yesterday, it was at $181. There's a lot of room, about $50 worth, to catch up to where it was just a few months ago, 2 months ago, couple months ago. So that's why we're seeing an $11 increase, 5-6% increase in a single day. And there's more room to run. However, in addition, before the June $68 a barrel, if you go to the $68 before that, OIH was in the 300s. So it's possible there's even more catch-up trade just to $68 a barrel. But we've already outlaid the dynamics for the price per barrel to go up. We've already seen it be up in the last couple months, up to $77 per barrel, with the economy not fully reopened and with Delta concerns. Let's give it time. Let's watch it play out. The trade is working. I believe it will continue to work. There's risk involved. You should know that. Do your homework. I believe it's going to go up. Price per barrel of oil. And I feel like I've outlined the reasons for that. So if you have questions, I'm more than happy to answer. Please comment in the comments, tweet me, also like, subscribe, and follow. You can find all my socials on my card, which is my digital business card company. Should be somewhere on my YouTube. If not, it is my link in bio on Twitter. So until next time, peace out.